Welcome, dear traders. As we have assumed, many Wall Street traders are betting on a smaller rate hike by Fed Reserve tomorrow. All three U.S. benchmark stock indexes rose sharply yesterday. Japanese and Australian shares followed suit. Asian stock markets are also impacted by internal factors. Let's discuss what sentiment prevailed on the forex in the Asian session and which factors affected currency moves. Optimism returned to Wall Street after the release of the New York Fed survey. Respondents expect a decrease in inflation in November, as well as in the long-term prospect. At the same time, the majority of investors, namely 77%, also anticipate a drop in the CPI and the 50 basis point rate hike. However, in the Asian session, speculators were concerned about the news from China. They were also cautious ahead of the US inflation report. Apart from that, this week is certainly one of the most important and eventful ones in 2022. Four of the world's leading central banks, the Fed, the ECB, the Bank of England and the Swiss National Bank, are holding their final meetings. Moreover, three regulators, the ECB, the Fed and the Bank of England, are projected to raise rates by 50 basis points. Naturally, the CPI report and the Fed Reserve rate decision are of a high importance. However, traders are more or less aware of what to expect. For this reason, they will focus their attention primarily on the Fed's outlook for 2023 and Jerome Powell's speech at the press conference. The US dollar looks more confident ahead of the Fed meeting compared to its rivals. The pound sterling, the euro and the Swiss franc will hardly be able to take the upper hand even after a rate hikes. The US currency remains stronger thanks to a stable and resilient American economy. However, the US dollar index has already rolled back from its record high of 114 locked in September. It retreated to 104.90 points. Interestingly, the greenback reached that high within the first three quarters, but it slid into the correction in just 2 months. The trajectory of the US dollar clearly reflects the market sentiment. Now the US dollar is fallen as traders are pinning their hopes on a drop in inflation and a smaller rate increase. In the Asian session, the greenback was consolidating in the narrow range of 104.80 to 105.10, gradually moving down. It's likely to remain in the downward channel until the release of the inflation report in the American session. The yen managed to rebound amid the weakening of the US dollar, so the dollar-yen pair settled below the psychologically important level of 138 yen per dollar, trading at 137.70. The Japanese currency also climbed following the speech of a leading Japan financials. This time, traders did take notice of this speech. The Bank of Japan should change the language to give itself more allowance in adjusting interest rates according to overseas and domestic economic developments, NAKAZORA, the chief credit strategist at Paribas, said. After the repeated statements of Haruhiko Kuroda about a strong commitment on ultra-soft stance, such comments literally became a breath of fresh air. NAKAZORA is considered by some market players as a candidate to take one of the two Deputy Bank of Japan governor posts in March next year. It needs to communicate that interest rates could move up or down depending on economic developments, NAKAZORA said. It's important to send a message that the Bank of Japan's massive monetary easing will come to an end. Such remarks bolstered the yen. However, these are just the long-term prospects. Now the yen is still weaker than the greenback. In the Asian session, the dollar-yen pair was moving in the downward range of 137 137.30 and 138.00. It's likely to consolidate there until the release of a CPI data in the US session. The US and the Japanese stock markets are up amid some positive factors. The Aussie is not so lucky. The NAB Business Confidence Index in Australia fell to -4 points in November. This was the first negative indicator since December 2021. Such a decrease occurred due to soaring inflation and interest rate hikes by the Reserve Bank of Australia. Nevertheless, the Australian dollar, which is usually immune to internal factors, managed to rise amid growing oil prices. Besides, there is a chance of a wider opening of China's economy. What's more, the risk sentiment is again high thanks to rising equity markets. In the Asian session, the Aussie was growing in the intraday corridor of 0.6740 and 0.6787. As the greenback edged lower ahead of inflation data, the AUD/USD pair advanced to 0.6766. A further trajectory of the pair will solely depend on the US macro stats and Powell's speech. And that's all for now. We hope that our relevant video reviews make your trading more profitable. Stay tuned and keep close tabs on the market developments, and see you soon.